What's going on, everybody? It's Jeff here. Welcome back to the channel. Pretty slow day today so far for AMC. We've got about an hour left in the day. Volume was much lower than the 65-day average. Pre-market saw some nice pushes, almost hitting to that $50 level. In this video, guys, I want to go over a couple things. One of them just being just the overall state and health of the market. I'm also going to cover a tweet talking about hedge funds leverage as of right now and the amount of margin that all these hedge funds are currently on compared to historical data. And then I also want to cover with you guys why AMC really seems to be channeling. Okay, it'll give you a good idea of exactly what is happening. So let's get right into it. First off, let's just take a peek at the 5-day chart. Yesterday was a great recovery day. The first couple days to start off the short week were a bit of a bloodbath, touching down to that $39 level. I want to highlight a couple things here. I know I've been covering the charts a lot more lately. If you go over to the 1-day chart, guys, as you can see right here, we talked about bouncing off that $39 level. Guys, I'm going to make a video for you guys that is going to explain in much further detail why technical analysis, why these indicators are very important. I know some people talk about them still being important. Some people kind of don't understand them. Some people say it doesn't matter with AMC and GameStop. Well, the reason being behind all of it, and I will get into much further detail, is it's all done by computer trading. That's why these technical indicators are very, very important to us. We jump over here to the 4-hour chart. All right, we bounced off the 100 moving average, and it looks like what we were once holding support of, the 50 moving average, is now acting as a little bit of a resistance. But that's okay, guys. Fridays normally, historically with AMC, are pretty slow generically speaking. If you look at both the 4-hour and the 2-hour chart, all right, RSIs are still pretty oversold. MACDs are looking for a nice sign of a reversal. Which is going to be good going into next week, especially seeing that double bottom happening again off that $39 level. As I said in my last video, guys, last time we bounced all the way back up to that $65 mark. We're talking a 60% incline. So it'll be nice to see exactly what happens going into next week. First off, let's talk about the overall market. As you can see right here, guys, the S&P, the Dow, the NASDAQ, really roaring back. This title of this article says it perfectly. Stocks rise to records to recover losses as investors shake off growth concerns. There was a little bit of worry about what was said yesterday, the tapering of the asset purchasing by the feds. Okay, eventually interest rates are going to have to start to rise. Inflation is starting to slow down a little bit as the economy fully recovering, getting back to normal. It seems to have hit its peak. We've still got some strength ahead of us. I think it might be a little bit choppy going forward for the next few months. And generically speaking, summers can be just a little bit slower. However, once we get into the end of this year, into 2022, that's when we'll have to really take another look at what we are investing in and how we are investing, because the market will start to change, especially as interest rates start to rise. Now, this is the tweet I wanted to talk to you about. It's by a guy. His hashtag is Delta1 Walter Bloomberg. He's always posting information very, very quickly. He probably gets this from the Bloomberg terminals. All right, but right here it says, a Fed report, most measures of hedge fund leverage are now above their historical averages. You read some of the comments, it's like kind of like, hey, no shit, buddy. But this chart kind of just says it all. Right here is where you can see where the S&P has been trending, and the margin debt is just completely following it pretty much to a T, which means, guys, as soon as there is some pullback, because they're on leverage, the amount of shifting and positions that they're going to have to sell off in order to maintain their liquidity requirements are going to be amplified, whether they're on 400% margin, 600% margin, whatever it might be. So the changes, the downfalls, the moves are going to be amplified, just as the rise, the bounce from here was completely amplified, guys. I mean, if you can see where we're at sitting, we bounced in after COVID, bounced down to that $2,300 level, and we're almost up 100% from that point. So just as it amplifies it on the way going up, it's the same thing on the way going down. I do want to cover this. Fintel I was looking at earlier today, we had about 98 million shares of short, currently sold short. If you look at the last recording, this is on the reporting date was 6/15. It's going to be coming out in just a couple days. July 12th, as you can see right here, guys, 85 million. We're getting back to that 100 million shares short, which means, as you know, they are continuing to add to their short positions. Okay, they are probably going back and forth, a little bit of, a little bit of shorting and probably just a little bit of covering, getting those small gains to really cover some of their losses. I did read that hedge funds did actually have a fairly decent month of May. Now, this is hedge funds in general, okay, institutions in general. It's also an article that could be 100% complete bullshit. Okay, keep that in mind, but it did say it did have a little bit of coverage there. So there is that to go through. Last thing I want to cover, guys, this is important. It's why we are continuing to channel. I've been really studying the options data for quite a long period of time. Okay, and a member of of our private community had pointed out to me today that the amount of volume, options volume, really being traded back and forth just between calls and puts is pretty high, and I think that's why we're seeing that volume still sustained, even though you don't see the insane amount of call volume that was happening back in June. Okay, so basically what's happening, guys, if we jump back over to a shorter time frame chart, is considering the IV is fairly high with AMC, the premiums are high, and when you buy and sell can be very lucrative. And as you go, let me just jump over to 5-minute chart to give you guys a different time frame. As you go, as you can see some of these changes, guys, they're pretty big moves to the end of the day. That was a over a 7% swing. All right, it's swinging to the upside, it's swinging to the downside. You look at a little bit what's happening today. Okay, we're bouncing off here at 45, 46, going right back up to that 47. It's a 3% swing. So not only are traders getting in on that, but it's also the options traders as well, playing the call side, playing the put side, okay? Because depending on what their expiration is, and especially if it is today, all right, the amount of profit that they can leverage by utilizing an options contract that especially would expire today or even next week, having theta really working against them because the time frame is so short, the amount of profit that they can get out of it is pretty astronomical. I don't have the VWAP pulled up here, okay, but it was bouncing off that top VWAP, coming back down, and they were continuing to play it. That's why it continues to channel. All right, that's another reason why I talk about the technicals I covered with you guys earlier. As you can see here, just in the 2-hour chart, exactly where we channeled in between the 50, 100, and 200 moving average. The same thing happens on the daily. They use the VWAP a little bit more, all right? But that's why we continue to channel. Once we get that next catalyst, they get the next leg up, find that another level of support. That's where we're going to continue to rise. And as you can see, this MACD is slowly curving up. So it'll be nice to see exactly what happens going into next week. Continue to talk to your friends and family about AMC. The movie theaters had pretty awesome numbers last week. I know a huge part of the country, you had heat waves. Where I'm up here in the Northeast was crappy. I mean, the weather was down to like 57 degrees. A lot of people going out to the movies. All is good news for us, guys. I hope you enjoy your weekend. I am going to make that video talking in much further detail about not only just technical analysis, but give you guys the understanding of why it's important. Okay, I've come from a marketing background, and computer automation has made my business really go from like 1 to 100. And it's the same thing that these large institutions, these large hedge funds are doing. Okay, it's all computer trading, as you've seen articles about one big dog, okay, trying to poach an algorithm for like over $100 million, and he got sued for doing it because, like I said, this proprietary data is what makes these hedge funds absolutely be able to kind of manipulate the market. So, but that's it for this video, guys. I'll keep you covered. I'll see you in the next one.